ahead and start things off once again here. Once again, I'm Richard Bourgault. I've developed a software. I'm the founder of a company called SegStream. We make essentially what I'd call cost seg operations software. So many of you guys will know that. Maybe some of you won't. But that's kind of my bio. I've been doing cost seg almost 20 years now, which is strange to think about. Uh, and then here I have with me John Denovich. He's been doing cost seg much longer than that. And then I've got also he works for he's a partner at Jennings Denovich. And then I've got Dawn Poland, who's also a partner there as well. She's a CPA. Okay, let's go ahead and just kick it off with the ostensible topic here, which is 1031 exchanges. I imagine we'll probably mostly going to be it's mostly going to revolve around 1031 exchanges and how those affect cost seg. But we'll leave the topic open, and then obviously, if we run out of fruitful topics around that or subtopics, then we can address anything that anybody from the audience would like to talk about. And one more just bit of information here. Just if you have anything to say about any particular topic, we're considering this an open forum. This is don't be afraid to chime in or ask a question. We appreciate that kind of interaction here. Okay. I am not the biggest 1031 exchange expert, so and neither and actually funnily enough, what we were talking about before the call came on is how none of us here are technically any like what we would consider experts on 1031 exchanges. We've had various experiences with them, what essentially came up was when you're dealing with 1031s in the context of cost segregation, you're definitely going to have to rely on the experts, the exchange agent, to give you the different bases that are going to be affected or not be affected in various ways by the cost seg. So with that, I think I'll just John, did you want to maybe take that?
Well, I think Dawn could better kick off the discussion.
Okay.
And like maybe Dawn, like what is a 1031 exchange? Basically, why would a client do it? And then we can get into the nuts and bolts.
Yeah, sure. We can do that. And we can, there's a lot of nuances and we can kind of walk through how we handle it or try to handle it. There's things that I see out there, but yeah, actually the exchange agent themselves won't know the basis amount. So it just gets, what happens, what I see is 1031 exchange is something in the tax code that allows people to sell a building and buy another building, and it has to be for purposes of real estate investment. So you can't do it like with a primary residence or anything like that. It has to be real estate. There's some different, rules around that. It can be land, but you can exchange one property for another property and defer the gain. You don't have to pay the gain at this time. And that allows, from Congress's viewpoint, that allows for more transactions to take place in the economy. And they always want to fuel the US economy. But the nuts and bolts of it get really tricky when you're deferring a gain. How is that really tracked by the IRS? And that's really where the problem comes in from a cost seg standpoint, because what happens is the net book value of your old property becomes the net book value of your new property.
Sure.
So what that really means is that if you bought your old property for $1 million, so the $1 million was your cost, and normally that's what you could do a cost seg study on. But we won't talk about whether you did that or not on your original property. But if over time you're going to depreciate that, whether you're doing straight line or whether you're doing accelerated depreciation. So let's say 20 years in, just for easy math, you've depreciated half of that. Well, you've gotten a deduction for that. So now you've taken post-tax dollars and put them in a pre-tax dollar bucket. So your basis is only 500,000. That's the only remaining piece that you haven't gotten a benefit already for. So you can't get your benefits twice. So when you buy and you sell that property for 2 million and you buy another property for 2 million, that 500,000 now becomes the basis of your new property. And that's the kind of step one. But the IRS also looks at that and they say, you know, that 500,000, you had an interest in that money before. So it's not new to you anymore. And bonus is only allowed on new money, new interests, new to you. So if it's sort of used, then you don't get bonus. You're not allowed to have that. So that 500,000 no longer can have bonus too. So you not only have to track that, but you have to do the bonus piece. So what I see in the marketplace is many things. First thing I see is investors have no idea, absolutely no idea, that the old basis is going to be the new basis. So 100% of the time, they will come to a cost seg professional and say, I bought a building for $2 million. And they're not even, they think they can get a cost seg study on 2 million every single time. And so then you have to ask them some questions or look at the closing statement to try to figure out that it was a 1031. And then now you're stuck where you have no idea what the basis is. So that's the first problem. And then the second problem is then you have to go to their CPA, or they do, and say, what is the basis going to be? What are you actually going to record as the basis after this 1031 exchange on their tax return for this new building? Because that's what you want to get to. The problem is, I see, is that CPA, that tax accountant, is not going to calculate that number until April 14th. And in order to do the cost seg, you need to know that way earlier, but they never going to want to pick it up. So that's the problem number two. And then problem number three is, even when they calculate that number for you and they give it to you, they are never going to bifurcate what's the new money and the old money. So you know what bonus to put on and what bonus to not put on. So you're stuck educating the CPA, you're stuck educating the client. You're kind of in the middle of these wheels of a very complicated calculation, because there's a lot more to it than just those straightforward numbers.
Hey, Don, what about the gain? I mean, there's the net book value, but you bought the building for $1 million, 20 years later, you sell it for 1.5 million. So not only do you have the net book value, how is a gain handled? Is that, you know what I mean?
Well, that's just it. So that's why, okay, so if you were to have sold it and didn't do a 1031, and let's say you sold it in your example for the 1.5 million, your gain is going to be $1 million because your net book value is 500,000. That is always how the calculation works. So your gain is $1 million, and then of that $1 million gain, then your CPA or tax accountant will decide which piece of that is put back in the recapture bucket versus the capital gain bucket, which are different rates. But that's your total amount that's going to be taxed is that 1 million. So by sliding that $500,000 over into the new property, you've preserved that. So let's say you did the exchange, and then in day two, you decide to sell it. And you sell it for the 1.5 million, the same thing you just exchanged it for. Well, magically, you've got that same $1 million gain when you calculate it on your tax return. That's how they know. So 20 years later, they know still what what you deferred, because it's right there tracked in your tax return, and that's how they do it. Yeah. So that's the first step. I mean, we can go into kind of how I try to move those needles along for those kind of things,
right.
But when I worked at a really big a really big CPA firm that had 2,000 or 3,000 people, there was only one person there who knew how to do the calculations for 1031 exchange, and they did all of them. They're complicated.
Yeah, and that in itself, that was great, Dawn. I mean, so that's kind of the overview. So like, what happens in the cost seg world? I get a call. Oh, I bought a hotel, 3.2 million. First question, did you do a 1031 exchange? You must ask that question on every purchase. If you don't, you can get caught with your pants down, when it comes down, when it comes to it. And then it becomes, you never want to lose that client. That might be the first time they reach out to you. And, they're going to be a long time client. So you definitely want to show your expertise, but I do not think it does you any good to pretend that you're a 1031 expert. You can cost seg any building. You can cost seg any building that's bought with a 1031 exchange, but how do you estimate the benefit to the client? And so my terminology is I can do a cost seg on anything. but is it in your best interest? And so that is always the first thing. So you just got to ask, you just got to, when you're taking out, what's the address? What'd you pay? Got any ideas for land? By the way, was it a 1031 exchange? And we're seeing a lot more than we used to see. I do also get questions from clients that say, well, is it better for me to not do a 1031 and just do a cost seg, straight up? There's a lot of debate around that. But usually by the time it gets to us, it's already done because you got to do that in advance. Now, there are such things as reverse 1031s where you buy the new property and then they sell the old property later. It gets highly technical. And unfortunately, what I do is I take the information, I look at it and I say, well, typically this is what you'd be looking at, but your number is going to be much less than this for your benefit because you did a 1031. So was it a mistake? Not necessarily. You're getting your benefit from your 1031 and you're getting the most benefit that you can get out of it, whatever a cost seg can do with however that 1031 shakes out. You have maximized your depreciation. So you don't want to chase them away, but you do have to educate them and say, well, I need to know what your CPA is going, CPA deals with the exchange agent, not you. You definitely aren't going to be working with the exchange agent. But the CPA will work with the client and the agent, to get the numbers. And like Don says, I've got those right now. I've done two 1031 exchange for a client, and they can't be closed until I get what Dawn mentioned was the old money and the new money. Because the old money you don't get bonus on. Now, you can always, and also a 1031 usually drops that basis down. Hopefully you're going to get a big, a much larger new property that they buy. Then it doesn't affect it as much. But if you can even get the basis out of them, not even the old money, new money, get the basis, and then you can run an estimate and say, if it's all old money, this is your benefit. And generally, fees are low enough for cost seg, that there's always a lot more benefit, than fee. And you can still do an ROI and say, this is the least we can do. And the more new money that's put into this deal, that you had to spend, the better your benefit's going to get. And so that's kind of how we don't chase them away. They're just as valid a potential score for a cost seg engineer as any project, but they do take more work and they take more time. But that's the basis of it.
Yeah, it's true. I mean, you want to try to make it, show them enough potential benefit for them to want to move forward with the study. And then you can work on right now we have one client where two brothers exchanged a property into one property, and two different CPAs are involved to try to get, and one of them, well, they might not be brothers. They might not be brothers now that you say that. I don't know that. I think they might be because they have the same last name, but that doesn't mean that they're brothers. I will tell you, I'm not the exchange agent, but that's what they did and it's a done deal. But I can't even get the one CPA to answer any emails about anything to try to get.
In the end, though, the CPA to file the return has to have a basis. And so they will eventually get that basis. The problem is if you take a 1031 project and you don't know what the basis is exactly, or how much new money or old money, you got to be very careful because you could end up doing a site visit, pay your travel expenses, put your engineering time into a project just to find out when that CPA finally pulls the trigger like 2 days before the tax are due, and you find out that you had estimated about $1 million basis or $1.5 million basis, and it ended up being 300,000. Now you charge the client $6,000 to do the study, and they've got a first year benefit of 1,500. So how do you handle that? So you have to be careful on how you handle it. You have to be thoughtful, and you got to stay on it. And you got to make friends. You got to make friends with that CPA. You got to make friends with because you'll get more information out of them if you're friends.
It's kind of tough. But what I do, my secret weapon, I mean, you guys, and then we can open it up and you guys can tell us what you see and what you do. I try to get the depreciation schedule of the old property. I try to get the closing statement. If I can get the closing statement on both sides, I can at least roughly bifurcate what came in for exchange funds and what was new funds. I still have to know the loan values on both sides and some different things that I might not know, but I will try to do a best effort stab at a calculation and send it to the CPA, because what I have found is if you get the ball rolling, they're very quick to point out, oh, you did this wrong. Oh, you did that wrong. But they're looking at it and they'll calculate it for me and they'll send it back. Versus if I just ask them to do it and I haven't started it for them, then I'm much less likely to get anything back in any reasonable timeline.
That's actually a good point, just in general, I find. I mean, in business, when you're talking to somebody, you're like, hey, you need to do this. Like, that's one thing. But if you're like, hey, I'm working on getting this worked out for your client, and here's what I've got, like, it's so much easier for them to open up and be like, oh, okay, let me look at it, Whereas it's
Yeah.
like, no, I need you to come up with something abracadabra, pull something from a hat. It's like that they're like, that's real work. Like, that's going to be like, I'm going to have to put that off. I'm going to have to, to procrastinate it.
Yeah.
One thing that John alluded to earlier, which is funny because this just came up. One of my clients who does a lot of cost segregation himself, has a few properties, and he was thinking about doing 1031, and then he looked into it and he was like, well, gosh, my base, I'm gonna have so much basis that's not going to be eligible for bonus. He's like, plus I was going to sell all the properties, I was going to sell the properties kind of like at a discount in a portfolio. He's like, but if I don't time myself down to do a 1031 and I sell the properties separately, he's like, I probably, come out maybe even 30% more on the properties. Plus I'm going to get all the bonus, on all the money.
Mhm.
He's like,
Mhm.
it actually looks like I might just forget doing a 1031 just based on the amount of cash flow I can say. But obviously there's different,
Different
calculations.
scenarios, but that's smart of him to look at it at the onset that way, because I don't think most people do. Most people just hear that they should be doing it. I should be doing a 1031 exchange, and they don't realize what they're giving up.
Yeah.
And in the tax world, so I have another, groups that I talk to in a presentation, and I talk about like 401ks too and 1031 exchange. You have to consider what you're giving up, and sometimes it's control. In 1031 process, that's part of it, and whether you're going to get bonus or not, they have no idea. They have no idea until the deal is done. And I have seen many people who only owned a property for a year or two and had just a small gain anyway, and they've had to pay the exchange agent fees on both sides. They certainly did not think it through. They're just, kind of hell bent on, I got to do a 1031 because that's the thing, that's the way to go. It's crazy.
Well, I know a lot of wealth advisors that I've talked to. They, this is the Bible, right? And it's like you want to transfer wealth to your children. You sell 1031 every single time and die with the properties. And I think they're when the specific when you're not paying attention to the specific circumstances, you can definitely get stung.
Mm-hmm. Yeah.
Yeah. Does anyone else, have a story or anything else they want to add to what we've already said?
Richard, you got me, Mark Bordeaux.
Oh yeah, Mark Bourgault.
So
What's up?
yes, it was Richard and I think that we're discussing this a month ago. And so for my own personal situation, so looked into this.
Yeah, I was keeping you anonymous, but you've just outed yourself.
Not a problem, but I want to reiterate what Don just said and what you said, because I heard it from a syndicator friend of mine that I really respect. And yes, a lot of people sort of go the 1031 route, and costs and effort may not be worth it, but it just seems to be the thing to do. So I want to just echo that. And I guess I'm probably speaking a little more to the 1031 process than from about that than how it relates to cost segs. But yeah, I was the one looking at, I have multiple properties. Maybe I'll just sell them all, pay the recapture and gain, and then just buy one new property and depreciate that. Of course, bonus would have a big impact, and if we get substantial bonus back, that process would probably work quite successfully. Maybe not dollar for dollar. But just sharing one thing that I did learn about the 1031 process, there is another type of product that you can invest in. It's called a DST, Delaware Statutory Trust. And I'm actually looking at that for my personal circumstance because those offerings tend to be open for quite a long time. And so I can sell my multiple properties, get into that same investment. And then there are two types of DSTs where one is a short-term hold. So my whole situation was, how do I sell 20 different properties, you know, sort of do a 1031? And I think where I'm at, just to catch you up, is I'm going to sell them all in 25, get into one DST for 2 years, and then 1031 into a specific property of my choice. My accountant and I had done a scenario looking at the recapture and gains versus doing a depreciation on a new property. And so that was an interesting exercise. Of course, it varies across
like a headache.
board. But yeah, I mean, if 100% bonus was there, I'd probably be chasing that. Anyway,
Yeah.
those are the two things I wanted to.
Well, maybe it's coming back too.
That's interesting.
That's the
Yeah.
other thing. So, you know, maybe
Yes.
waiting is just the, you know, if the DST is a way to kind of stopgap, then
Yep.
maybe that makes sense, because I think bonus is coming back. I don't know if, you know, if we took a poll here, what everybody would say about bonus being back.
Well, more likely.
Here, I'm sure everybody would probably be, you know, 10-4 on that. But, you know, thank you, Mark, because I was actually going to, once you brought it up that it was you, I was like, oh, we got to hear what you came up with. So it sounds like you even went, you're getting even further down the strategy rabbit hole, which is great. Maybe we'll have to revisit that sometime in the future and see how it all worked out. Thanks, man. Anyone else right now?
Yeah, greetings. Can you guys hear me?
Yeah.
Hey, how you doing today? Jordan Capper with Maven Cost Seg. Little background, I'm not the CPA myself, I'm the project manager. So pardon me if I ask a silly question. Dawn, super cool information and very great summary, allowing me to understand it. So yeah, that's a rare skill there. What I'm wondering is and try to get what I'm asking, because I'm not going to ask it the right way. In this study, right, you're talking about the cost basis of, the property they sold and they went into the 1031 exchange. What is the responsibility of us as a cost segregation firm, to obviously want to verify stuff and you don't want to deal with bad information, but in the actual detail of looking at the cost basis of the new property, are we somehow reporting or discussing that sold property that they 1031'd out of? Do we have to put that in the report? And what is that actual physical calculation, or what does it look like? Because what I'm getting at is to say, is there a way to just say, okay, here's your cost seg on this new property. The accountant offloads some of that responsibility onto the accountant and put out a report that, and I don't know if this is legal or not. Like I said, I'm the PM.
I see what you're saying, and this is a good question, actually. I mean, technically, it's up to the accountant to calculate and give you the numbers. But you're right. I mean, as far as you are really just doing percentages on the building. So if you simply say, here's the total basis that I have, you've got to tie to a number, but you don't know which piece is going to get bonus and which piece isn't. You could get that total number and you could do your percentages and you could leave it at that, and you don't have to specify. I do think, though, that we usually do that based on, though, we make sure that the CPA is in agreement with all of that, because I just feel like it's going to get lost in translation. It's not the cost seg professional's job or responsibility, and maybe they shouldn't be even, I wouldn't say weighing in on it. But we do in our calculation say bonus, we use that when we're calculating our ROI and things. So it kind of does make, if I don't have those numbers and I can't really say what your total benefit was at the end, I can't wrap it up with that nice bow. But technically speaking, your percentages are the same. Your work is really exactly the same. It is only going to be when they put on that depreciation schedule, you have to bifurcate basically your entries into the system, one getting bonus and one not. So if that's not in your report, it doesn't make your report any less kind of valid. It's just going to be harder for you to say at the end of the day, hey, I saved you, or I got you, $200,000 of depreciation, additional depreciation, so to speak. You won't necessarily know the answer to that.
Got it.
Also,
Yeah. Yeah, this makes
where
sense.
is it?
And
Where is it? The fridge?
yeah, sorry, go on, Jacob.
Where is it? Where's the book?
Oh, I think he's just talking.
There.
He's
I think
not
he's on the phone, maybe.
unmuted. The other thing I would ask is the typical like workflow for these types of cases. I could imagine, like you're saying, this interaction with the accountant. Of course, end of the tax year, we get all these people. I need my cost seg, obviously before the due date, whether they filed an extension or not. But for these types of cases, it sounds like, and correct me if I'm wrong or if you've seen any issues here, it sounds like it might be reasonable to kind of really have this discussion up front, really say, look, this actually, there's no hurry here. It might take us a little bit longer. We can add it to our 1031 headache queue, if you will, within our CRM.
Yeah.
And it's like, okay, this might take 2-3 months. We're completely done with the project, but we really want to do what's absolutely perfect for you guys and make sure that we get this exact final number. And it relies a lot on the CPA. Do you have some kind of workflow like that, or?
Yeah, we do. I mean, we just hold it. We can do all of our work. So the problem is more kind of in the beginning where you need to show them the estimate that verifies or I'm missing the word here, it substantiates your fees and it gets them to sign that engagement letter and moving forward. I wouldn't tell them at the onset that it's going to take several months because it may not, and you don't really know. I would just say, once you get to that point, we're done with our work. As soon as we get the final number from your CPA, we'll finalize the report. And then that allows them to put pressure, on that CPA. And some CPAs are better than others. But in calling them and might help, do that. But that's exactly what we do. We just sit on it and wait until that number comes in. Because once that happens, I don't know how quickly you guys can, finish your report. It doesn't take a heck of a lot of time to finish up.
So do you just do the cost seg by percentages, and then you just populate with the basis and let it flow through?
Yeah.
Yeah, that's really all that's going to come into play here with the 1031 is just the bases are going to change. The bases that get affected by, bonus and not. So that's really what it comes down to. And that's why, the most important part probably for cost seg person is getting that the estimate anywhere near without having all the information. That's kind of what Dom was going over earlier, is that like I'm trying to back this out from the information that was given to me. But, unless the CPA knows exactly what the two different bases were, you're kind of taking stabs at it from the beginning.
Yeah, this is a good opportunity to sell too. I mean, I look at all these little things, at least personally, when I'm talking to customers, and I offload a lot of sales directly to Sean, my partner, who's a CPA. And so, you come with something like this and these guys are like, oh, I never heard of that. Like, oh, that's so good, and it allows you to kind of cage that EOB as well as a true estimate, and the complexities in it. Cause I think, some of these firms are just blasting out these, talk too much trash here in front of 36 people, but like some of these guys are just blasting out these EOBs and it's like, they didn't look at it, they just kind of like willy-nilly
Didn't
did.
ask either.
Yeah. It's like I can send out any EOB you want, man. Geez, you want to say you make $10 million in a pony? But you get my point. Like,
Throw the pony in. That always works.
yeah,
That's true. And that's a whole nother topic, maybe Richard, for another day, is what we see that. And then people come to me, well, this other firm promised me a lot bigger benefit. I'm like, well, this other firm missed the boat on a couple things. I have had that happen. And so there are several CPA firms that strictly use us now because other cost seg providers have promised something. And then at the end of the day, that wasn't what the bonus rate was, or that's not really what they were able, that's not how it's
I
tough.
like-
So the estimate is really the tricky part.
I like to
Such a
piggyback on
big
what
spot.
Jordan said. Jordan, I think that it gives you the opportunity when you're dealing with your clients to show your expertise. I'm not a 1031 expert. I'm not the agent, and I'm not your CPA. But I can tell you this. This is how it works. And I can do this for you. I can do that for you. And that's a lot more than they're going to get from the typical firm. I just did an estimate the other day where we couldn't understand why they were promising so much money. And then when we looked through their proposal, they didn't take any land out. So sometimes, you know, I think it's always best, you know, to show, you know, to try to show your expertise and never talk anybody down, of course, you know. That's the worst thing you can do is disrespect someone, but you can always use ways to say things, you know, without actually saying that.
Wait,
But, yeah.
I just want to make sure I got Don's comment correctly. Did you say some CPAs are better than others? I thought
Yes, I
I
did
thought they
say
were all the
that.
same. I thought they were
Yeah.
all the same.
No.
Easy.
That couldn't be.
I'll just echo whatever he said. Don, you explained it super well, and 1031s are complicated. And as I've done this for 12, 15 years, you know, a good discussion might be opening up to how do you market it to entry level cost seg salespeople and project managers that get the right information, make sure they understand there's a 1031, and, you know, get as much information you can, separate yourself from those that don't ask the right questions up front. It's all about the stuff up front.
Yeah.
And then a lot of my CPAs will just use the percentages, and they figured out, like you say, on April 14th or March 3rd, 14th. Like, here's the numbers. You can do it at whatever you want with it. You know, and we'll certify the numbers. But
Well, they're the ones coming up with the number, and the client's going to sign that on the tax return. Is that CPA comfortable standing in front of the judge with that approach?
Sure.
Okay.
Yeah.
And I don't take offense to your comment about CPA, because I'm a
The
recovery.
percentage, the number is the same, and the cost seg is the same. They come up with a number, and cost seg still applies the way we engineered it, right?
Yeah, the cost seg piece is the same. Yeah, for sure. I
Cost
think,
seg piece doesn't change.
yeah, I mean, what I do for clients is it's just one of the questions I ask them. You've got to give me your address, your place and service date. Oh, and tell me if this was a 1031 exchange. And then I put in parentheses, if so, more questions will follow. And I just leave it at that.
If so, call Don.
Yeah, keep it.
Yeah,
And if
I
it's an
look at it
exchange,
like
if it's an exchange one, then definitely call Don, because there's not much worth in there.
I look at it like coming up with land value. You know, you're not going to go to cost seg jail. You know, I mean, it's the CPA signs it and the client signs it, and you're just taking in an assignment and doing the very best you can. So as long as you do the very best you can, they're the ones that sign the return. And we put it in our notes, you know, ask, you know, this is the date, you know, I got the basis, you know, advise this, advise that. And if an agent wants to talk to me, I talk to him anytime, you know, but that's what I'm going to tell them, you know, it's just an assignment for us. We did the best we could for the client, you know, and this is the information. They're the ones that signed it. Same thing with land. You can't, you know, if you, the cost seg engineer isn't responsible for the land allocation. Now they might help, and they might put out a report with a certain land allocation, but they didn't sign that return.
Yeah, and but even if they didn't, I think, you know, I mean, this was brought up actually at the ACSP conference last week. You know, there's a term that somebody used, which was like some sort of duty or whatever. But I think the main thing that you just said there is, hey, you know, get it in writing. And I tell all my clients the same. It's like, look, this is not something that you're an expert at. This is not something that you're meant to do as a part of this, you know, with land or with this 1031 bases. And just get it in writing that this is what we're saying the bases are. And it's like, why did you do this as a cost seg engineer? If that comes up in an audit, you're like, why? Because I have this paper here that says, or I have this email that says, this is what the basis was. This is what the land value was. I mean, that's just, I mean, I think that's just table stakes when you're running a company around doing cost segs. You just can't be an expert at everything, and you have to be able to delegate that to the.
Yeah, that's critical. Like you say, you might get that information. I got a lot of folks that, you know, they like to work on text or they like to work on phone. Some people like email. Everyone's different, right?
Yeah.
But if you send me, you know, every study before I close it out, there's an email that goes out. I call it just a final checklist. What's your entity name? Do I spell it right? What's your place and service date? Do I have it exact? What is your basis? Do I have that exact? And please either confirm or provide the correct information. And if they won't give it to me, and there are a few people that don't, then I fill it in for them and I send it to them. And I say, based on our call, this is what you told me. This is what I'm going with. At least I got something, you know, at least I got something to hang my head on.
Yeah, nice. I think that's a great SOP to have, because yeah, you can't be too careful. I mean, you really want to, you know, you want to do your best by everybody, but everybody here knows how long it takes for people to get back, especially when there's a deadline, uh, then you're facing down, okay, well, this person just isn't responding. And it's like, well, in this case, like, here's what I've got, please respond if you think, if anything here needs to change. If they don't respond, that is the response.
Well, I don't want to make 1031s all negative. Like I said, we get a lot, and we have sent out a lot of reports that were 1031 exchanges, and the client did very well. There's nothing wrong with them. It's just, I think like Jordan was saying earlier, like certain people are just a little more flippant, than I think we need to be. We need to take it serious, but it's still a valid opportunity to make a sale.
And Don, I have a quick question on another thing, just to confirm what I've been told.
Okay.
And as the CPA or the more licensed area, they do need to make a reset election, right? For the cost seg on the exchange basis. Section 168. Are you familiar with that?
What kind of election?
It was told to me as a reset election, kind of resetting the exchange basis to allow them. It doesn't get the bonus, but that does allow them to segregate that basis coming over. Does that ring a bell at
No,
all to you?
never heard that. And
That was a previous guy at a previous firm had all these rules about this, and I didn't know if it was real or not.
interesting. No, I mean, I think even doing tax returns and seeing there's no, well, there's two ways that elections work. You can either check a box and it'll be in there, or you actually have to put a statement into the return. I have never seen either for anything like that.
Yeah, it was 168I or 168J or something. I don't know. Okay. I didn't heard that before either, so that was kind of a new.
Yeah, the 168 is it's 168K. I can never remember all those. That is that where the bonus is. So you might be opting out of bonus. Opting out of bonus is an election, actually.
Sure.
But
you don't have
technically,
to on the exchange basis, right? That's already
you can't. You're not allowed to do it. So this is actually different than that. So I don't know what he means, because if you opt out of bonus, you're opting out of that for all of your assets for the entire year. So you can't just do that willy-nilly. Like, this is different. So yeah, I have no idea. And actually, somebody asked a question in chat, about I haven't read all of it, but I'm seeing a look back.
Let me read it out loud. So have you done a look
Adjusting
back
land.
cost seg study where you're making a land adjustment and prepare the 481A adjustment and the resulting adjustment to 515, 27, 539 year property because the original depreciation schedule was incorrect and the client/CPA made no prior allocation to land? Doesn't that require an amendment?
Yeah, that requires an amendment. Yeah, you can't do that in a 3115. So
quick example on this year, a major real estate developer back east, and talking to their in-house CFO, and I looked up the land county. I said, look, I got their depreciation schedules, and they had land way overvalued. And I'm like, look, this is the land, it really is this much, but you're on your depreciation schedules, $1 million more. I'm like, you can amend it and adjust it. And then the owner's like, no, we'll just use the high land value. We don't care. We're not doing it.
that's interesting. People don't want to amend because it opens up your statute, and maybe they have other secrets in their return.
Oh, so many others, I'm sure. I mean, it's a tax, right? He's like, no, we'll just let it go.
Yeah, they'll let it go. But we see that if I see somebody that messed up their land allocation or even didn't allocate to land, I'll just tell the CPA, I noticed that, but it's hands off for me. That's not what I'm looking at.
Yeah.
That's my, because I'm not going to be a part of amending, but I'm also not going to put it in a 3115.
No.
Yeah, thanks for so there was another kind of addendum there, is that we often seek a broker opinion of value as a part of our due diligence for valuations. Are others in the group doing the same? Mark has responded, per the IRS, a commercial appraisal is respected, accepted valuation, a broker opinion of value falls short of this standard. I can't speak to that.
So I think Mark, is that what you said? Or because I know we talked about that when you're doing big studies. We talked about this, I think, last time. When you're doing really big buildings, that's important. But when you're doing these little $500,000 to $2 million buildings, you are not going to get the client to cough up the money for that.
Yeah, but exactly. The more money that is involved, I mean, the more it just makes sense to actually get an appraisal done. I mean, that was a conclusion we came to last. It's like, yeah, if it's a $20 million property, I mean, what's an extra 3 to 5K here? They're gonna be more than making up for that just with the cost seg in the first year benefit. So
for sure.
Yeah, I think that's it for the questions over here. Does anyone else have anything to add, into what we've been saying right now? I actually was going to ask, and this is just, I remember when I first came on at Ernst & Morris, John, were the 10th, I think the 1031 rules were different, where
Well, the
you
rules were different. The rules were different back then, but
where you would cost seg the old
yeah.
building, and that the cost you could cost seg. You could actually we used to go back and we would go back and actually cost seg the old building, and then the cost seg basis would come forward. No,
No, I don't think you're remembering right. It was a very,
maybe I
pretty
am.
simple.
It was a long time ago.
Mike Morris, goes way back and he's kind of a semi-famous guy in cost seg world. And he was really plain. He goes, he didn't even want you making a call or making a calculation or anything. He said, yeah, we'll do a cost seg on the 1031. Back then, I mean, there wasn't even bonus, when we first got started. So we didn't have to worry about bonus. And the rules were different. But it was like, we don't arrive at basis. You give us the basis. We'll do the study. You give us the basis. If you don't, then we're not going to do the study. We'll talk to you later. And he didn't really worry about it. That was the way it was done back then. But there wasn't as much competition back then. You can get away with it.
That's true.
Yeah,
So this brings up another point that I think we talked about at the Cost Seg Society initially, but nobody really mentions it anymore, which is if you did do a cost seg study on your prior property that you exchange, then you have to compare your new allocations. So you actually first of all, you have to do a cost seg study on your new, because once they got rid of personal property, you can no longer exchange personal property. When you bring assets into that 5-year bucket, you're saying they're personal property. So you have to, it will taint the whole thing, I think, if it's more than 15% of the exchange. And I would be curious what people are doing in practice for that. I know like big buildings and stuff, I'm sure they're all over it. But honestly, for me, it's so hard just to get this information. A lot of times I get that old depreciation schedule and I don't see that a cost seg study has been done. But if I do, do I run calculations on the back end when I'm done to go ahead and make sure everything's kosher? Maybe not always, because I probably might even forget. I mean, I'm just curious as to what people are doing with that.
Another point, Richard, they didn't, that was long before what you're remembering when you were at Ernst & Morris was, there was no bonus for purchases,
Yeah.
You didn't have to worry about that.
I don't think any bonus. I mean, wasn't Obama the first,
Bonus
didn't
was in before that. Bonus started, I really think it started in like 01.
30%.
Well, bonus goes way back, but the rules for purchased properties, I think it was the 2018 then.
2000, the end of 2017.
Yeah.
John, I guess we're comment on your thing about the 1031, the personal property, and it's more of a discussion item, because aren't you really just exchanging the 1250 property and the basis of your 1250 property? And then if you have a cost seg, the 1245 property generally doesn't have recapture, so you don't really have to pay a boot on that. So you're only exchanging the basis of the 1250 property. So who really cares if you can't exchange personal property?
Yeah, that's a good point.
Did I say that right?
I would argue that, yeah, you would say that. Yeah, so you don't have a basis.
Unless you have a little basis and you want to be a little bit more conservative and pay some boot on the personal property sale, but most people don't.
I know as long as it's not 15% more, or I can't remember all those rules. I read them all back in the day, but I don't pay a heck of a lot of attention to it now. But it is interesting. Yeah, I agree. And this is the whole recapture conversation. When you read the letter of the law in the Internal Revenue Code, it doesn't say when the life has played out, you don't recapture anymore. It says you recapture. So even if, you're 15 years in, you would put that 1245 property back in your ordinary income recapture bucket. But, we have
only if there's a gain, though. Only if there's a gain.
Well, yeah. But in real estate, usually there's going to be, right? Or else
not on personal property. So you cost allocate your sales price to the 5-year asset, and you apply the basis to the sales price. You can avoid.
Yeah, I see what you're saying. So this gets into the whole, in my mind anyway, the conundrum between state law is what allows you to do the 1031 exchange because it calls it real property.
It is
And
weird.
then federal tax law calls that portion of that same item personal property. So, which is it? Yeah.
Yeah, that is muddy.
Yeah. 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 Well, thank goodness I don't see any audits in this area, but I'm sure they happen. I just haven't seen them.
I haven't seen them.
Yeah.
Yeah, I don't remember any guidance on any of that, seeing anything about it. And I think we had another call on audits, and I just don't know how much especially now after the elections, the rumor or that, with tax cuts, there have to be other cuts, to make up for the tax cuts. And I've been hearing that the IRS is on the chopping block, all that money that was promised to them. So that would even mean less audits, so, so that's just it. A lot of providers, they play that, that game, because they're not going to get audited. They can do whatever they want, but I think you got to have some integrity, and I think in the long run, it helps you.
Sure. Yeah, I mean, you're always better off following the law,
Mhm.
regardless of the
Mhm.
regulatory environment. I think the whole recapture topic is I don't know. I don't want to say interesting because that would make me sound like a nerd. But I think it's interesting. I think it is interesting that I don't really think about it all.
Didn't you do recapture talks, Don? I think, was it the ASCSP or who was it with?
I have done them for a CPE organization. I can't remember. I've done so many, but yeah, I had a whole presentation on recapture. It's complicated too. It's actually not nearly as complicated to calculate though as a 1031.
Of all things. But yeah, so I was just going to say maybe that's a topic for a future call too. Is looking at recapture and looking at the implications, when doing cost seg. So, anyone want to chime in at this point? Any questions or just to remind everybody, this is a totally open call. Love to have audience participation if you're feeling the urge.
I can derail us a little bit if you want. Well,
Sure, we got time.
All right, cool. So I'm kind of an operations guy, and at Maven, we kind of go through these stages as we kind of grow, and we're always kind of discussing like, okay, for the next stage of growth, how do we handle the next, we'll say 10x, right? As we grow the team, as we grow the people. And so what I'm actually focused on for the past couple of weeks is really getting our operations like highly, highly streamlined, right? And I kind of wanted to just ask and see if anybody has a spiel, because I have a whole spiel for operations, right? And that goes all the way from sales, tracking it from what we say is like the pre-project side, which is just kind of standard CRM, aka sales. The interesting part, kind of like what Dawn is saying, is like, man, the info gathering part of this sale is huge, right? What a unique type of scenario. I guess other sales do that, but boy, you really gotta do a lot of research before you can put out an accurate EOB. That part aside, that to me that's standard CRM, standard sales, standard tracking customers. You can talk about all the marketing too, but where we find challenges is just really keeping track, making sure we're hitting all of our deadlines perfectly, making sure we're not missing any communications. We have dedicated project managers, stuff like that. But I'm kind of type A, so is my founder, Sean. We like want everything literally perfect. It's like, hey man, why didn't you upload these pictures perfectly? I see you missed some of them. You didn't document this right. What the heck are you doing? This EOB was sent. Why didn't you click on our EOB sent button? Has anybody else ran into these kind of struggles or like just have comments on it? I'd love to hear.
Yeah, that's why I no longer work at my prior firm.
I bet every one of our studies has an error.
All the TPS reports, Josh, right?
Yeah.
That they made you fill out.
It causes a lot of
Yeah,
stress.
there's a balance, and when you're overbearing, you're going to have turnover. People are going to get tired of it because some things matter, some things don't. I'm definitely a proponent for documentation, definitely a proponent for accuracy. I think, if anybody knows me, probably not most of you, but I'm on the side of erring on the caution. I'm conservative, but when it comes to overbearing on procedures and mandates and micromanaging, and to a point where it hurts productivity, you wind up having turnover, and that's what happens. I've been on both sides of it. John will laugh here. I've worked for firms that didn't give a shit, and they were. I'm no longer there either. So finding the balance, I think, is very important. But just be careful not to be overbearing with that kind of stuff, because you will. You'll burden your people and they will not stay long if you got.
Yeah, I want to
bosses.
give Jordan the benefit of the doubt here, Josh. I think what he's trying to say is like, we need to keep a track of these things, but I don't want to be overbearing and I don't want the process to overtake all the time we're spending. So I think I think he's trying to fish for solutions here. And I
He
think
doesn't want to drop any balls.
Don
I
is
think.
good at this kind of
Yeah.
stuff. Don is really good at process. In fact, I think we went through we did a whole webinar on this.
We did a webinars on this last summer. We did, yeah, on the process. And I mean, so Jordan, what's your main project management tool that you're using?
So right now it's actually Excel, which
That's your
I've
problem.
used.
Yeah.
Yeah, no, I've used a handful of other CRMs and we're kind of ready to make that big jump. I think what we've built is fairly robust. It's actually, put a lot of time into. I was never like, oh my God, you track everything in Excel, because I come from a self-storage background where we've had a bunch of acquisitions and we've taken over pen and paper kind of guys, Excel kind of guys, the whole thing. And we've done plenty of transitions with these big facilities. For me, it's like, all right, we have this system that does work, but taking this next jump is a really big deal, because that build out, right? A CRM build out can be
Yeah.
A
an
lot of sunk costs.
Oh my
It's,
gosh,
yeah.
yes.
Well, I let me just ask you one question. I guess in my mind, the CRM should not be your project management software. And I don't know if any
Yes.
CRM is going to do both.
Plenty of them have a CRM feature project. Yeah, I'm more talking about project management.
Just project
absolutely.
management, yeah.
Yes.
So I think, you've got to have one feed into the other, but you need something that's robust. I mean, we use Smartsheet, and so that's what we went to. And I don't want to say it's the greatest, I mean, they advertise Monday.com all the time, but what I like, and the ball dropping thing, and John, you can say, whether you like this, and David, you can say whether you like this, but I want to be able to look at where my projects are at any given time without having to ask anybody. And I want to be able to look at that and see what is here, it's there, it was there was last. And I also want to see all the information. I actually don't want to go out to a drive in a folder and see if they gave me this or that. I want to see it all in one place. And because I just want to cut down on the time that I'm having to hunt and peck and hen and peck and all that kind of stuff. So I have found that it works pretty well, because you can create dashboards and little filters and to see what you want to see. But I'm sure there's a better product out there. I don't know.
Jordan, I'm a big Asana fan, but we're a software company. I mean, that's a little bit different what we're trying to do. But actually what's funny is we break the mold with that, because most software companies are using like Atlassian products, Jira, things like that for ticketing. But we use Asana, and it's super powerful. And the thing is, like, it's actually weird how like you can actually get away with not paying them for a long time. So if you want to try them out with Asana, like, you can honestly, like, it's very easy to not pay them. And like, I found it's really powerful. Obviously they have some things you can't use, but you can use the project management aspect of it, like, to a really high degree without paying them. And it's so that, when you're investigating these things, as I mean, it sucks to have to be like, oh, I've got to pay just to even like figure out like whether these features are going to work for us. So, I mean, maybe that's just something you might want to look at as Asana, but
yeah, a lot of them are going to have your 30 days, your trial period. But I mean, now that we're in November, if I were you, Jordan, I'd be testing out something to try pretty quickly, because you won't be able to bring anything up to speed, in January to April timeframe.
good point.
Yeah, absolutely. I mean, if you look at it as a fun project too, I've dug deep into these things, and that's set up that, there's so much sunk cost, right? Just in the current system that you have. But maybe me
Even
raising my
before you
hand to
pay,
ask
though,
about.
there's some cost, because it's just
Yep.
getting into it, right? And just
Yeah.
learning it. Yeah.
Oh my
Once your
gosh,
team learns
absolutely.
something, like, do you really want to switch?
Yeah.
Well,
It's
the good
challenging
thing-
as well, just the 30-day trial, lots of time isn't enough time to see, hey, is this can I put all my data in there and it be able to work for my company?
You're
So
right.
some of them, you have to try them out a little bit, but you still might have to take a gamble on going with a specific software.
Yeah.
Yeah.
Yeah, Jordan, when Dawn introduced Smartsheet, I think you and Dawn have a lot of similarities as far as, like wanting things organized and always trying to do your best to have everything at your fingertips. And so she introduced Smartsheet to us and worked a lot. It was a lot of work she did. David did a lot of work. We had another gentleman that did a bunch of work. And then we even bought some time with Smartsheet to bring their expert in to write, because it works like Excel in a way, and then in a way it's not. And how you write the formulas is very, very different. But I will say this, we're using it now, and it is wonderful. You can just load information into an intake form that Don created, and it populates Smartsheet, and then you tag someone to do the estimate. All the pictures, the information you have can be attached. And when you want to know about a project, you just pull that baby up and go to that job, and you can go from left to right and pretty much see everything. And everything from, was the estimate created? When was it created? What was the date? Yes. Then it was the estimate sent? Yes. When was it sent? Yes. Who is this? What's the email address? That's the cost. What's the basis? What's the land? It just goes, and it gets long, but like David said, it's you gotta have a leap of faith and then pick something and then go for it, and hopefully it works for you.
Yeah,
And
hopefully it does
so
not
far
work.
it's working for us.
And it's not too expensive, actually, which is a good thing too. I think we only pay like $900 a year for
Yeah,
it.
it's like $1,000, like $1,200 a year or something like that.
Mhm.
But
Jordan, I apologize
Excel, I
if
was on Excel forever, and I used to have databases with lots of salespeople and this and that. And then we went to Google Docs so we could share, online. And it was the same format though, the same columns, the same verbiage. But I wanted to know what's the status? Well, it's not finished. You can't get too far. But with Smartsheet, you can say was site visit set up and the date, yes, no, was the site visit completed? Where is it at now? Oh, it's in the first review, it's in the second review. You know what I mean? And you can really see where it is. If you're managing like a group, 10, 15, 20 people, it would be something that you'd have to have.
I would be remiss not to plug SegStream. We are actually building these types of features right into the software for reviews, for different things. Who sold the job, when the estimate was finished, when it became a job, all that kind of stuff will be a part of a dashboard coming in the new year.
That's
That'd be
awesome.
awesome.
Jordan, let me say real quick, I do apologize if I misspoke on what I was saying there. I do understand from the management side, it can be burdensome. It's just making sure that you don't, burden your actual producers with.
Gosh, it's
too many
okay. We know that
tasks.
you had some trauma. No, I'm just kidding.
Yeah, just throwing that out there. Keep that in mind so your actual producers don't get bogged down and start
Well,
getting
I
the
think-
realization of
I
things.
think, Josh, that point is valid.
Really
I mean,
important.
the idea, I think, in all of these things is, and Richard in your program and Jordan, what you're doing is for nobody to duplicate any effort. So if you're on site, it'd be so awesome. And we've talked about this, Richard, that, you taking your pictures and you just upload them right to where they need to go. There's no coming back and taking them off your camera or taking off your phone and transferring the data. I mean, the idea is for everybody to work more streamlined so that you're taking away these parts of your day that really don't add value. I really hate making file folder names, typing out, this is Ted's engagement and here's his, so I'm trying to get like Zapier to do all that kind of stuff for me because I'm tired of it.
Well, we're even integrating storage stuff in. So like you could, if you set up your storage, like with SegStream, like you have, set file folder structure and stuff like that, we'll pull the photos and everything can be just like directly accessible from there.
Just the way you like
Another
it.
shameless
That's good.
plug, guys.
Well, that would be awesome if you did, it would be once you're done.
Yeah. Well, that's coming soon. I know we're 1 minute over, and Jordan, I don't know if you had anything to close that off or not.
No, I was really just looking for motivation and a speech from everybody. And I thank you all. I'm ready to rock.
You actually got it. And you
Good,
know what?
Jordan, you
I
got this.
appreciate what Josh said, because he's right. It's like, in the end, like, the people that use this they gotta not hate you for doing it. So,
Yeah.
all right. Well, I
thank you.
appreciate everybody coming to the webinar. I know we're running a little bit late, but you know, and we got a little bit off topic, but hey, that's why we do these things. And hopefully we'll have another good topic coming up. Let us know if you have a topic that you want to discuss, and we'll try to get it in. Thanks, everyone. Thanks, Don.
Thank y'all.
Thanks, John.
Bye. Happy Thanksgiving to everybody.
Yeah, happy Thanksgiving.
See you guys. God bless. Bye.
Bye bye.